Hi everybody, welcome to this Wall Street News. According to the U.S. Bureau of Labor Statistics, U.S. economy added 818,000 fewer jobs than originally reported in the past 12 months, from April 2023 to March 2024. Fed officials might have known the reduction in the non-farm payroll numbers. The minutes of the Federal Open Market Committee meeting held on July 30th to 31st said, quote, many participants noted that reported payroll gains might be overstated, end quote. In addition, the minutes said, quote, the vast majority observed that if the data continued to come in about as expected, it would be appropriate to ease policy at the next meeting. According to the CME FedWatch Tool, traders are pricing in a 34.5% chance for a 50 basis point cut at the upcoming FOMC meeting in September. 10-year Treasury yield falls to 3.8% as recent economic data show that the U.S. economy is slowing down. U.S. stocks rose Wednesday. S&P 500 added 0.42%. The tech-heavy Nasdaq gained 0.57%. The U.S. Bureau of Labor Statistics released the preliminary estimate of the benchmark revisions to the non-farm payroll numbers on Wednesday. According to the report, U.S. economy added 818,000 fewer jobs than initially reported 2.9 million in the past 12 months, from April 2023 to March 2024. On a monthly basis, U.S. economy created 174,000 on average during the period, much less than initially reported 242,000. Fed officials might have known the reduction in the non-farm payroll numbers. The minutes of the Federal Open Market Committee meeting held on July 30th to 31st released on Wednesday said, quote, many participants noted that reported payroll gains might be overstated, and several assessed that payroll gains may be lower than those needed to keep the unemployment rate constant with a flat labor force participation rate. Some participants noted that as conditions in the labor market have eased, the risk had increased that continued easing could transition to a more serious deterioration. Fed officials also discussed the September rate cut during the FOMC meeting in July. The minutes said, quote, the vast majority observed that if the data continued to come in about as expected, it would likely be appropriate to ease policy at the next meeting. Several Fed officials talked about the rate cut at July's meeting. The minutes said, quote, all participants supported maintaining the target range for the federal funds rate at 5.25% to 5.5%, although several observed that the recent progress on inflation and increases in the unemployment rate had provided the plausible case for reducing the target range 25 basis points at this meeting. According to the FedWatch Tool, traders are pricing in a 65.5% chance to reduce 25 basis points of the federal funds rate, a 34.5% chance to cut 50 basis points at the FOMC meeting in September. 10-year Treasury yield had jumped as U.S. consumer spending came in stronger than expected and the initial jobless claims decreased 2 weeks in a row. But the yield fell as flash economic data such as industrial production and housing starts showed that the U.S. manufacturing and the housing market are still struggling. 10-year Treasury yield fell further to 3.8% as BLS preliminary annual benchmark revisions signaled U.S. labor market was not as strong as initially reported. For the U.S. stocks, S&P 500 rose 0.42%, Dow Jones Industrial Average added 0.14%. The tech-heavy Nasdaq gained 0.57%. Okay, this is the end of today's news. Thank you for watching. Have a great day.